Good afternoon everyone. My name is Ram Dhamija. Welcome to my channel. Today is 20th of May and the market are just correcting one way. There has been a waterfall, a decay that has been seen in the markets. This is my yesterday's video wherein I had shared is the market crash coming and Nifty prediction for tomorrow. And the main reason for that was when I had shared this video yesterday was that there was a downgrade that Moody's had done for the US markets, and second thing was that the Japanese bond yields were rising, and so was US. So that was basically creating some sort of pressure in the global markets. Along with that, our put call ratio was signifying a huge short build up yesterday. So all of that culminated today, and this is the kind of fall that you can see in the markets. Yesterday, though, the US markets recovered most of their losses that were there at the open, and they kind of closed flattish to green. But today again, US futures are under pressure and they are down by -3, -0.4%. And where is this going to end? We will have to see with today's US market open and close. Now, is this happening because of COVID virus news, or is it happening because of the bond yields issue? My sense is it's not because of the COVID thing, because markets don't fall twice on the same issue. Now, if you look at it over here, this is how Nifty opened up. Nifty opened somewhere around 24,900 odd today, and from there it has been a secular one-way decline. And we are now trading at almost 24,678. Wow. So we have lost almost 1% from yesterday, and we are very firmly below the 25,000 mark. Now this is the Nifty on a one-day chart, as you can see. So this was the resistance line. We briefly managed to trade above it, but really, honestly speaking, I mean, these lines are also indicative. So it is in the same zone that we have not been able to break this big resistance, because this was the last intermediate top also that was made, right? So this becomes a kind of a support also on the way down, and a resistance on the way up. So while on the way up over here, we were facing this resistance, and now we are firmly trading below this 24,870 odd number. And the next support is going to come at 24,200 is what I had indicated. But these are just charts. Charts of course give us supports and resistances, but they are not absolute line in sand that it can't be broken. But it gives us a good indication where the markets are headed. So this pattern is showing that we are making higher highs, higher lows, until unless we break this low of 21,800, which is very, very, very far away. We are okay. We should be okay. So there are multiple supports which will come in between, and so on. The next support, in my opinion, is about 24,200. So let's see whether we go till there or not. But what is the main reason for this? The main reason is, look at the kind of open interest that is building up. Today also 6 crore calls have been written in the system. 6 crore calls. Yesterday also the number was similar. And because of this, what is happening is that there is too much of pressure in the markets. And if you see, the put call ratio is at 0.48. It was about I think if on Friday, if I'm not wrong, it was close to 1. Then come Monday, it went to about 0.6, 0.7. And today we are below 0.5 also. So it is indicating huge bearish positions being set up by the option players. So 23 crore calls have been written in Nifty versus 11 crore puts. So that's like a real sign of worry, I would say. VIX though is not too much up today. It is up only 0.5%, but yeah, I mean, it's some sort of a short build-up, which we'll have to see whether this gets covered or not. See, the flip side is also true. When these kind of short positions are built, huge short positions, and a good news comes in, then there's huge short covering rally. But whoever has built these positions will want to take some profit, some money. So the market going down is kind of signifying that these huge call positions are coming into picture. Now let us look at how the sectoral indices are behaved. Nifty Auto is down, mid cap is down, FMCG is down -1%, financial services is down. So pretty much everything is down. Everything is down. In fact, all the sectors are down today, and VIX is up. So this shows the extent. On the indices, we might be down by 1%, but if you see, everything is down. And if you go into the heat map of all these, you will see cuts which are much more than this, to the tune of 3 to 5% on individual names as well. What are the global cues indicating to us? There's actually not pretty much anything because US 10 years is down, slightly down, it's below 4.5. US 30 years is at 5, it's close to 5. So these are big problematic signs for the world markets. Nasdaq, as I said, closed flat yesterday, and Nasdaq futures are down by minus 0.47. So it could be that we are taking cues from the slight cues from the negative global headlines, and we are falling on our own weight because we have rallied so hard. So it's quite possible because the world markets are not correcting so much as they should with the kind of news flow that is there. US dollar index is at 100, which is good for us, and gold is at 3200, which is fine. USD INR is at 85, which is absolutely fine. So global cues as of now are not very bad. Now if this minus zero point 0.4 turns into like 2 or 3% down overnight once the markets open for the US, then yes, it becomes a big negative cue for us, but otherwise they are looking all right. So where do we go from here? With 2 days left to expiry, and with this 0.48 kind of a PCR, anything is possible. If this trend continues, then we might have a good downside on the markets. But the flip side to that is that if there is some very good news that comes in from unexpected quarters, then there's a short covering also possible. But my understanding would be that these trends typically go on for some time. Okay, they don't reverse immediately. So this big huge red candle that you're seeing, we might extend it a bit more, and then we will have to see how the market plays out, because do remember that market took out 25,000 in one day from 24,000. This is Friday, which is about 24,000, and Monday we were at 25,000, and of course this was because of the good news that came in of the war stopping. But if we go down, we might be filling this gap as well. We don't know. Anyhow, any correction is a good buying opportunity, and that is how one should see the markets. If you invested for the long term, then you should think that okay, any fall is giving you an opportunity to buy stocks at a cheaper valuation. So 2 days to expiry, and today again, the hedges came into play, especially for Sensex. So I maintain that on days wherein there is one-sided movement, then the hedges, the buy part of the options actually tend to help you a lot. So that probably needs to be part of your strategy. Some cushion, some hedges, help protect you. And today the Sensex expiry was, although one side, but there was some very sharp movements on the upside as well. So if one was able to navigate those, only then you would have made money, because put stop losses would have gone immediately, and then in that sharp counter move, a lot of call stop losses would have also gone. So if your systems are strong enough, only then you will be able to navigate through all these and make money. So that's it from me now. I shall see you tomorrow with another update, and I hope all of you had a good day in terms of trading, and were able to navigate this downfall. And I had prepped you yesterday for the same. I can say that a little bit. So do keep watching. If you like my content, please do subscribe to my channel, and please share it with your friends and family. Thank you so much for watching. I'll see you.